Good morning, traders. Today is 10th of June, and welcome to the Tuesday market briefing. We'll be covering the US dollar index, WTI crude oil, gold, and the Australian dollar. So, starting with the US dollar index, the dollar index hovered around 99 on Monday, giving back gains from last Friday. While Friday's job report showed a stronger than expected employment growth, it wasn't enough to shift the broader bearish tone. And the dollar remains under pressure as markets await fresh US economic data later this week, alongside renewed optimism around the US China trade talks. And President Trump and Chinese President Xi are expected to send negotiators to London for another round of high level discussions, following a call last Thursday signaled progress. And technically, the dollar index is still stuck in a downward channel, trading below the key moving average and holding a bearish RSI near 45. If it fails to hold above the 98.66 and 98.32 support zone, we could see a test of the previous low around 97.91. And on the upside, a breakback above 99.7 may offer some relief, potentially pushing the index toward the key 100 level. So moving to crude oil, the WTI crude oil continued to firm up, trading near 64.5 a barrel on Monday. And optimism over the US-China trade talks is helping to stabilize the demand expectations, while supply risks remain in focus. And over the weekend, Russia intensified its strikes on Ukraine following a drone attack on one of its air bases, raising concerns about prolonged disruption in global energy markets. And from a technical perspective, oil has broken above the $64 resistance level for the first time in weeks. If it can hold above $64, the next target in the 89 is the 89-day moving average near 65.1, followed by 66.5. And support lies near 63.3 and 61.9, while the $60 psychological level remains a major floor for now. The short-term trends remains bullish, but geopolitical risk and upcoming inventory data could introduce some volatility. Now onto gold. Gold stabilized around $33.20 an ounce after falling for two straight days. Although Friday's strong US jobs report slightly reduced the expectations of an imminent Fed rate cut, the ongoing geopolitical tensions have kept gold well supported. And markets are watching developments between Russia and Ukraine closely after a new wave of missile strikes hit major Ukrainian cities. And meanwhile, hopes for the progress in US China trade negotiations may limit safe haven demand in the near term. And technically, gold is still in consolidation phase. As long as it stays above 3300, bulls remains in control, with the next upside targets at 3350 and 3403. If gold dips below 3300, we may see a retest of the 3260 to 3265 zone, which includes the lower end of the triangle pattern and the 50-day moving average. For now, the tone remains cautiously constructive. And lastly, the Australian dollar. The Australian dollar held steady around 0.65 mark on Monday, supported by a softer US dollar and encouraging economic data from China. May's CPI held flat year on year, while the PPI decline was slightly less severe than expected, easing some concerns about deflation in China, which is Australia's largest trading partner. And traders are also looking ahead to the upcoming RBA meeting, with Assistant Governor Sarah Hunt noting that rising global tariffs could dampen investment and economic growth. And from a technical perspective, Australian dollar remains above its 20-day simple moving average of 0.6458, maintaining a short-term bullish structure. And resistance is seen as 0.6538, the seventh month high from last week, followed by 0.658 and 0.66. And on the downside, key support levels include 0.6458 and the 0.64 psychological level. If risk sentiment remains stable, the pair could continue its upward path in the upcoming section. So that wraps up today's markets update. As always, I keep an eye on the key support and resistance level, especially with trade headlines and central banks move still in focus. We'll be back tomorrow with more insights, and thank you for tuning in.